In this presentation, we will enter a budgeted balance sheet within QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the open windows open. You can open the open windows by going to the View tab up top or the View drop down and selecting the Open Windows list. So we're going to select and create another budget, this time with the balance sheet. Notice that the balance sheet is probably not the first thing we think of when we think of the budget, because we think of performance. That's what a budget is. How are we going to do in the following time periods? The balance sheet shows where we will be, where will we stand as of the end of the next time period. So if we think of the income statement as the budget of the activity that's going to happen, the result of that activity will be where we stand as of the end of the next time period. So for this, let's first take a look at the balance sheet. So we're going to go to the Reports drop down. We're going to go to Company and Financial, and we're going to take a look at a balance sheet standard. And we will take the look at the balance sheet for the end of February, 02/28/19. This is going to be the data that we've entered so far as of February 28th. At that point in time, this is where we stand as of that point in time. When we think about the budget for the balance sheet, we're going to think about, well, where are we going to be at another point in time? So if we're going to budget for the next month, then we're going to think of where are we going to be as of the end of March. And part of the activity to get us to where we're going to be will be the income statement. So in other words, this is where we are now. The activity in the income statement is part of the activity that's going to be driving us from here to where we will be in March. So the balance sheet and the income statement, of course, are going to be in some way related in that format. So usually when we think about the budget, we think about the income statement and then think about, well, what's that going to be? How's that going to also impact on the balance sheet? Mostly often thinking about cash flow, what's going to be going on with the cash flow. So also the income statement will have a direct relationship to the equity section in the balance sheet as well. So equity, the income statement will roll into equity. So we won't get into all the implications of the relationship between the income statement and the balance sheet as we create the budget, or how we might create the budget, but keep the plan we would have to create the budget. But just keep in mind that when you think of a budget, the income statement, you really need to have the income statement or the profit and loss, because that'll help you to actually judge performance. We may want the budget also in terms of a cash budget, how much money, what's going to be the cash flow that's going to be going into place. And then we can kind of use that to gauge where we think we will be at the end of the time period. In other words, for example, what will cash be at the end of next month if we have revenues of so much? And then you got to think of, what are we going to be able to collect on those revenues? So what is going to be the ending cash balance here? So for us, we're going to go to the budget and enter some numbers. And again, we're just kind of putting in practice numbers into the system to have the budget for the balance sheet. To do that, we're going to go to the company drop down. We're going to go to planning and budgeting, and we're going to set up a budget. So here we have that. And so here's our budget, profit and loss. Now that's all we have so far. We're going to create a new budget now. So we're going to create a new budget. And this time it's going to be for 2019, but a balance sheet. So we're going to create a balance sheet budget. And we're going to say that's the one, and next, and click finish. So we're going to create a budget for the balance sheet. And of course, these accounts then will line up to the balance sheet. If we go to the balance sheet over here, we have these numbers or these accounts, and we're going to line up to them. So this is our last balance sheet. This will be our ending point. We'll think about how we're going to do in performance, both in terms of cash flow typically and in terms of the revenue generation, the budget on the income statement, activity budgets, and in terms of where will we be, in our case, in February. So we're going to go back to the set up budgets in the open windows, and we're going to enter all this data into February. So we're only going to enter the data for February for our example here. And I'll just enter the data in. We're going to say that cash is going to be 97,113. And I hit the down arrow to go down. We're going to say that the accounts receivable is going to be 9949. I hit the down arrow. This is going to be 1712 inventory, down arrow. Prepaid insurance, we're going to say 10,083. And then short-term investments, going to keep that 0. We're going to say undeposited funds, 4,500. Accumulated depreciation, negative 775. Furniture and equipment, 103,000. Nothing to security. Accounts payable, 1450. Notice these are all positive numbers, not like debits and credits. We're not showing debits and credits here. It's all positive numbers. And then we're going to say the Visa, 1,000. Oh, and then I hit enter instead of the down arrow. So let's see if I can go back into there. We're going to go to the company, and we're going to go to the budgeting and planning, and we're going to go to set up budgets. Okay, so we are in March. Notice I hit enter, and that basically said okay, and then it populated all the data, meaning it put the year-to-date numbers here, and we have zeros and everything else as of now. I'm just going to continue on March here, as if that never happened. So we're going to be over here in the interest payable, nothing there. Loan payable, we're going to say is 1654, down arrow. And then the sales tax payable is going to be 100. And then the unearned revenue, we're going to say is going to be 56769. I'm not sure exactly where that came from, but we're going to say that's the data we have here. And then we're going to say that the draws is going to be 100. And this seems like an unreasonable number for unearned revenue. We're gonna call it 5676. Seems more reasonable. So we'll keep it there. And then we're gonna say okay. We'll say okay. Well, we should save it and then say okay. And now we can see what happens in terms of the report. So we'll go to the reports up top. We're going to go to the budget report. So we want to take a look at the budget. And we want to look at the budget overview again. So reports, budgets, budget overview. And this time we want to make sure that we're on the balance sheet. We have 2 now. We want to be on the balance sheet and say next and finish. So here's going to be our report. And all we have is March because that's the next projected month that we're going to have. So if we then change the dates to 03/31/19, 03/31/19, then we've got our budget for March. Now, note that if you were to look at this, you're going to say, well, it may not be in balance here, so it's not in balance. So what happened to make it not in balance? Notice we didn't put anything in retained earnings. So one way we can think of this is the difference should go to retained earnings. And one way you can kind of figure it out fairly easily is you can try to export this to Excel. So we're gonna create a new worksheet, and we'll create a new workbook. And this is another way that the Excel is pretty nice that can help us to figure out some of the problems we could have here in creating these budgets, as well as other types of reports here. And so then we can kind of look at this and figure out what the budget should be. That's going to be like kind of our starting point. So now we can go here and say I'm going to go to the view and unsplit windows, unsplit the panes, and then try to think about, well, how is this off here? So this number of total assets are 225,582. So you would think that I'm going to say this number equals total assets. So this number then you would think has to equal that amount as well. So the difference probably should be retained earnings. So we don't have our retained earnings here. So we would think that the difference should be equal to this minus this amount. Maybe this should be going into retained earnings. Now also we should be tying out retained earnings to the balance sheet and what happened in February plus the activity that's going to happen. And I'm not going to go into the detail on it. I'm just going to enter the difference here and show you how you can start to think about the budget for the balance sheet. So we're going to put this amount then into retained earnings and at least be in balance. So 215,602, let's try that. Let's go back to the company. Let's go back to the budgeting in the company. So we want planning and budgeting, and we want to set up budgets again. And we'll go back in here and we'll say, how about we enter into the March opening. We're going to go into the March total equity. So we're going to the owner's equity, and we're going to pick up, going back to Excel, that 215,602. So into March total equity, 215,602, 215,602, 215,602. Let's see if that puts us in balance at least. So we'll save that and say OK. And so there we have that, the 225,582 and the 225,582. Now note that this puts us in balance here, so we have something that is at least in balance, but we should also tie this equity section out to our prior balance plus the activity that happened in terms of the net income, and we haven't done so here. Just want to give an example of how we could start to think about this and how basically the balance sheet, we could put the information into the balance sheet of a budgeted balance sheet and not be in balance. That QuickBooks is not forcing us to be in balance. It's not forcing us to tie out these worksheets as it does when we enter the normal double entry accounting system. We're never out of balance when we enter a normal balance sheet because QuickBooks won't let us enter any data that's going to be out of balance. That's not the case when we enter the budget. So when we get to the balance sheet, we have to think about, okay, what's our projected income statement's effect on the balance sheet, and if we do that properly, the balance sheet will help us with our budget. It'll help us to be in balance, which will help us with our budgeting process. We won't get into all the details on that. Just note that we're basically putting in the data input here, and that's something that we want to keep aware of. So we will go ahead and export this. So we're going to go to the Excel, and we're going to go to create a new worksheet, and we're going to put it into a new workbook that we had created in a prior presentation, and say browse, and this is the one we want. So it's under Get Great Guitars Report section 11. Double clicking on section 11, it'll open that report we had before, which was the profit and loss budget, and now we've got the balance sheet budget, and we're going to export that. As that prints, note that we also have the budget versus actual. We're not going to be using the budget versus actual in this example, but that option is available in terms of the balance sheet budget as well. We're going to open up the Excel. So here's what we've got. I'm going to format this a little bit. We're going to pull this over here and format the screen. And then we're just going to go to the View tab up top and do the standard Windows, unsplit the window. We're going to pull this to the right, so I'm going to pull it all the way to the right over here. Double click on it, and we're going to call it the budgeted balance sheet, or something like that. And then this looks like it's going to be formatted okay for us. It's all printing fine. So therefore, I'm going to go back to this item. I'm going to delete this first page, delete that. And then if we were to present this, then we can give this Excel document, or we can go to File up top. We can go to Print, and we can print as the Qt PDF printer, and we could print it all, the entire workbook, rather than just one page. So that will allow us to get a PDF file with all the pages fitting. And also note again that you can do a little bit more formatting here possibly in Excel than you could in QuickBooks, which could be useful for projections like this. I'm going to close this out and save this. And OK. Now the other way we could do this is to print these reports or save them as a PDF here. I won't go through this process. We've seen it a few times in prior presentations. Just note that how we're going to present this is going to be important. So do we want 3 PDF files that we can zip together and possibly email? Do we want one Excel file? Do we want to use the Excel in order to put it all on one PDF file that we can then attach in some way? Those are some options that we have. For more accounting information and accounting courses, visit our website at accountinginstruction.info.